All right. Welcome back, everyone. Another episode here on this lovely Monday afternoon, Eastern time at least. Welcome back to 0x Research. Today, we've got a full research squad on to talk through some recent ideas, some recent investigating and reporting that we've done. And I want to give a welcome here to Kunal, the most recent add to the research team here at Blockworks. So glad to have you on, Kunal. Great to have you first time here on the show. And then also joined by Dan Shapiro and Carlos. How are we doing today, guys?
We're good.
I mean, markets are red, but like everything's great. How about you guys?
I think the sentiment's back on, so we'll see how this week goes. I think it'll be a tricky week. I think the main one to watch is the PCE data coming at the end of the week. So that will give us a bit more like indication of where the Fed is leading towards.
Yeah, very, very different, like total sentiment shift over the weekend, I guess, right? There was a lot of excitement kind of coming out of the bounce after the sort of Jackson Hole event. And then seems like the market kind of gave it back and now people are doom and gloom again. But still seeing pockets of excitement here and there, in different areas. And I guess what we want to cover here today is maybe get out of the noise a little bit, get into some of the topics that we're digging into, have ideas on. But before we do any of that, I do want to make a couple of quick shout outs. For one, DAS London is coming up in October. So for those interested out there, definitely get your tickets. The Digital Asset Summit, it's coming to London October 13th through the 15th. Crypto's premier institutional event, top speakers from global funds, institutions, DeFi protocols, crypto companies, you name it. We'll all be there under one roof. Some notable examples maybe from our side of the thing, on the OX research side of things. Guy Young from Athena, Rebecca Reddick from Jita Labs, some favorites there. But use code 0x100 and you get £100 off at checkout. That's like 100 something USD. I need to review the exact conversion, but anyway, 0x100 for £100 off. Get your tickets. Come see some of us out here or out there in London. I don't know if anyone here will be there, but we do know Boccaccio, Mark Arjun, they will both be there for sure. The rest of the cast to be there is kind of TBD at this moment. I think they usually don't decide the full lineup until maybe a few weeks beforehand. So that can be a little confusing, but either way, we will see some of you guys there. And one other note is Blockworks is hiring data analysts. We're looking for a research data analyst to turn on-chain data and chaos into clarity, to find signal through the noise. So if you live in SQL, have worked in Dune, have worked with on-chain data, put together dashboards, love to build dashboards and find out insights from some of that on-chain data, we would love to hear from you guys. So link to apply is in the show notes. Check it out. If you are, crypto native and love to dig into the weeds and put together interesting connections, we would love to chat with you. So hiring is very much on the forefront, especially on the data side. I know that's what Dan Smith and David Rodriguez would certainly say. So definitely check it out and apply if you're interested and you think you've got the chops. And one last shout out to Katana, our sponsor for today's episode. Appreciate them. You'll hear more from the sponsors later, but for now, I think we can get into it. we can start off strong here. Kunal, first time on the show. I would love to get right into you. I know you did some digging on Kaito, and I'd love to hear some more on this. This is I don't know that we've talked much on the pod, at least, about Kaito and some of the the Yap drop, the Yap campaigns, things of this nature in a few months, maybe since the token launched. There hasn't been a lot of talk about it since then, but would love to kind of understand, what you've dug into there and where you see if there's value in Kaito or kind of what's coming for Kaito.
Yeah, no, for sure. Like, pretty happy about Kaito. It's my first research article for the team, and quite excited for this one. And as a whole, Kaito is basically an InfoFi protocol, right? And I'm sure actually a lot of our viewers are probably yappers out themselves on Twitter, so they would be familiar with the core mechanisms of how Kaito works, how the Kaito yapper campaigns basically reward people for talking positively or like just increasing information about a project on Twitter. But what really caught my attention for Kaito is firstly, the AI sector as a whole has actually been underperforming in this recent rally. So a lot of the focus has been ETH and ETH DeFi tokens. So a lot of these AI tokens are actually trading at very attractive valuation. And at some point, a rotation is going to happen, right? Like people who made profits in other sectors will want to rotate. And a sector that, like the retail and consumers really love is the AI one. So, when that rotation happens, I do think that people should, already have some exposure to quality names that have good tokenomics, are generating good revenues. And I think, that's where Kaito really stands at the intersection of that. They have strong product market fit. And, I think they're down 50% from the highs, but, traction has been improving. So you kind of see like a divergence between traction and revenues with the price. So that, in my opinion, is what creates like an attractive investment opportunity. And I'll basically just, run through the viewers, like my investment theses, some of the revenue numbers and metrics, and what I think will be the catalyst for the next leg of price growth for Kaito. So just to run through some of the revenue numbers. So Kaito's Yapper leaderboards and pro subscriptions together generate an estimated like ARR of close to 20.8 million. And how the business model works is basically they have currently around 92 Yapper leaderboards, and to have a leaderboard, each project needs to pay an upfront cost of around 150K USD. And for the pro terminal product, you have to pay around 10K, for 1 year, and they have an estimated around 700 customers. And so, yeah, this adds up to 20.8 million. And these revenues are kind of sticky because you have to pay this upfront, and then, the next cycle, it will need to renew. So that's the benefit of having these sticky revenues for Kaito. And then, I don't know if you're putting up the slides now, but we can, put up the slides or, yep, perfect. Yeah, so for the first one, so year to date, 106 million worth of tokens have actually been distributed to yappers. So these are projects airdropping like tokens to people who yap. So that's a pretty huge amount, right? So the fact that projects are willing to airdrop such a large quantity of tokens shows that they see a benefit in this. So, it clearly shows that, Kaito has found product market fit, and it's a pretty niche sector that Kaito pioneered and is currently dominating like market share in. So that's an interesting angle to highlight the product market fit Kaito has managed to generate. And yeah, if you look at the next slide, I will cover basically the core investment thesis around Kaito, which is basically it has been the go-to TGE playbook for most of the protocols out there, right? So you can just do the exercise yourself. Just ask yourself, what are some of the projects that have, TGE'd in the past few weeks? And then you can check if they have a leaderboard on Kaito. And the chances are they actually do. And on a weekly basis, Kaito is actually onboarding at least 1 to 2 protocols to have a new leaderboard. And, like I mentioned earlier, that's 150K in revenue upfront for each other product. So it's constantly scaling its revenue. And, we talked to the founder and he said that, they're seeing a strong demand for their leaderboard products. So they likely can sustain this pace of leaderboards onboarding moving forward. And the next question to ask, right? Okay, so from a protocol point of view, what is the benefit of having a Yapper leaderboard? So, I mean, obviously on a high level, the main aim is to get people talking about you so that your mind share increases. But it's not just mind share that's increasing. So in this table, I basically like the Kaito team posted an example of Wayfinder and how they benefited from the Kaito leaderboard. And basically, you can see that, yes, Twitter followers, mindshare increased, but on top of that, actual usage of the product increased as well. And that kind of shows you like this is how Kaito has designed the algorithm, where they're not just rewarding like any sort of slop and any tweets out there, but they actually want like, genuine, authentic content. And the only way to have this content is to actually go in and test the product, right? So it's not only mindshare, but actual usage increasing as well. And that's a very good, like for early projects, you kind of get initial user testing and feedback, and you can kind of use that to, revamp your product before launching. So you can kind of see the value is very useful for projects, and that's why they're willing to pay such a high upfront cost of 150K USD. And it's the same for, so that's pre-TGE. The other side, which Kaito has really been expanding to tackle, is these post-TGE projects. So, these are projects with mature ecosystems. They have a huge treasury. They can afford all of this. And for these projects, the pain points are often different, right? You already have users on your product, but sometimes, like the narrative around you is not really there, right? So basically for teams like, Arbitrum and Polkadot, they launched a leaderboard on Kaito because it's been a more effective form of like marketing versus like generic KOL spend, and they can drive very specific narratives. So that's important for these projects because now you want to gain a narrative amongst liquid funds, amongst builders. So, Kaito's product basically gives them like a more cost-effective and higher return avenue for them to do so. So there's benefits. So Kaito's capturing the whole spectrum. It's pre-TGE projects and post-TGE projects. So that's a pretty good aspect of the market that they have covered. Yeah, next slide. And so that's a PMF side, right? So the other thing I really like about Kaito is they have very solid tokenomics. And that's another thing that you don't see in many AI projects out there, right? So that really piqued my interest. So one side of the tokenomics is basically they have ongoing buybacks, and to date they've bought around 6 million tokens, which is around 2% of the Cirque supply. So this might not seem like a lot, but you have to take note that, Kaito is still, it's been, I think, 8-9 months since their leaderboard project is out. So they're still in a, very growth phase. But despite that, they've used 1/3 of the revenues to buybacks and the remaining 2/3 for growth. So I think they've kind of struck a healthy balance between growth and value accrual to token holders. And, as we can tell, this market is clearly rewarding projects with good tokenomics, good value to token holders. So I think Kaito stands to benefit from this. And what this buybacks does is also it makes the circulating supply of Kaito deflationary. So that's always a positive to have for any project out there. And yep, the next slide. So the other utility for Kaito is, so Kaito can basically be staked. So that kind of forms a supply sink for the token. So current APY from Kaito emissions is around 10.5%. But the key driver for yields for stakers has actually been airdrops from project tokens. So some of these projects with Yappa leaderboard airdrop a small quantity of their rewards to stakers. And this has actually accounted for around like 9.4 million year to date. And in the same duration, 1.3 million worth of emissions have gone to stakers. So you can see that the bulk of the rewards to stakers have actually come from this project distribution. And that's going to increase moving forward. So, we talked to the team, we found out a bit more about the G Kaito mechanism. And I can't drop too much alpha on the pod, but because we wrote about this for our subscribers. But basically, the G Kaito mechanism will incentivize projects to airdrop more tokens to stakers. So, this should further drive yields and further incentivize people to stake the Kaito tokens. And yeah, so the next one, so that's to date what is happening. The important factor would be what are the key catalysts ahead for the Kaito token. So yeah, Danny, the next slide. Yes. So it's the Capital Launchpad product. So I'm sure like those of you have been following Kaito, they basically they have launched their own capital launchpad where they kind of link they based on what you tweet, what kind of sentiment you're generating around a project, you'll get certain benefits from participating in the capital launchpad. Like just like a high level example, let's say I've been very bullish about the intent space on Twitter. If any intent project is raising on the capital launchpad, maybe they'll give me a better allocation. So it's kind of, they're designing the capital launchpad to get a more aligned cap table and reduce the odds of people dumping the tokens once the token goes live for trading. And this is actually going to be like quite a huge revenue driver for Kaito moving forward. They already have 5 projects on the launchpad, I think within 3 weeks of launching this product. And the first 3 projects have already raised close to $12.7 million. And they basically have a 5% take rate on this. So 2.5% is collected in USD, and the other 2.5% are in project tokens. So these project tokens will then be, airdropped to Kaito stakers. So that's another increase in yields coming for the stakers. And in my opinion, the market's not really pricing this. So in the table I highlighted here, I basically looked at, different cases and what the potential yields for stakers could be. And the current APY for so as on Pendle, current yields for Kaito are currently 40%. So that's close to my bear case scenario, which kind of shows you that the market's not really pricing in the potential drops from capital launchpads to stakers. So, and that's where the opportunity really lies. And one interesting aspect here is, so 2.5% of the project tokens go to stakers, right? But once these tokens trade, if they trade at a valuation higher than the ICO round, that means there's more revenue going to Kaito stakers, basically. And that's not been accounted for by the market. And how I see this playing out, like where I see the catalyst is, so what's going to happen likely is once these, so none of the capital launchpad projects they've done a few raises, but the tokens are not trading yet. So once these tokens start trading and the rewards start accruing to Kaito stakers, then the market's going to realize, hey, these drops are actually very significant. And that's when we'll start to see like a repricing in APYs upwards to account for potential future drops. And that's going to fuel the next leg up, because that's when people are going to FOMO and be like, okay, I need to buy Kaito tokens. I need to stake it. I want to get these yields from capital launchpad, right? People will start doing all sorts of moon math, being like, okay, if 2 capital launchpads are launched per week, then this is the amount of yields I could be getting as a Kaito staker. And that's what's going to drive the next leg up and demand for the Kaito token, in my opinion. And yeah, if you look at the next slide, it's basically to highlight my point. So if you look at the current Pendle yields, it's kind of been flat at 40%, which just shows you that the market's not really anticipating the drops that are going to come for the capital launchpad, which is why, in my opinion, like, the Kaito token has been kind of weak. But once, like I mentioned earlier, once this, projects start dropping, then, you're going to get a sharp repricing, and that's going to fuel the next leg up. And, in the research report I wrote, I basically did a risk reward analysis, and at a 1B valuation, it's a pretty fair valuation, and this pretty good risk to reward ratio to the upside. And, with a strong catalyst coming, I think this token could perform fairly well. So in the AI sector, you have very few tokens with a good PMF, good tokenomics, and good revenues. So, once the sentiment shift and capital flows to the AI sector, I think you got to pick the quality bets that will likely succeed. And in my opinion, I think Kaito stands a good chance to get some of the bits from retail, basically. Yeah. Open to questions, guys.
Yeah, I was going to say, really interesting, Kunal. I think so there are no, like typically what we see with a lot of tokens is when staking is involved is that there are like emissions of that own tokens supply that come online, and then stakers are paid via that. But are none of the staking rewards for like S Kaito or even potentially G Kaito paid out from like tokens that are becoming unlocked from the Kaito supply? Because I would find it's interesting if the rewards that stakers are earning is entirely from like partner projects that decide to do airdrops to them, and then they're also getting basically a cut of the revenues from the platform due to the buyback from Kaito?
Yeah, so at this moment, so you're right, there are emissions from Kaito to stakers. But if you just do the math, so year to date, around like 1.3 to 1.5 million worth of rewards have come from additional Kaito emissions. But at the same time, like 9.4 million worth of partner project tokens have been rewarded to stakers. So you're clearly getting most of your reward from these partner projects. And the rate of buybacks that Kaito does actually helps to offset this emission. So even, if you take into account the emissions, they're still deflationary. So they kind of have a good balance between both.
So their active buybacks have been larger than the total token
Yes.
emissions? Okay.
Yes.
Very interesting.
I think this is a great report. I have a question like for Kunal and the broader group, which is for post-DGE projects, do you think there's kind of this adverse selection problem where like projects that are like inherently do not have product market fit or have a hard time finding product market fit are the ones that are like paying Kaito for leaderboards? Like I know you mentioned Arbitrum, Polkadot. I don't know how much or how many other protocols are doing like these post DGE leaderboards, but do you think there's kind of this issue where there's this adverse selection of that if a project is paying for a leaderboard, it's basically because they're having a hard time finding like product market fit?
Yeah, I think that comment definitely is valid. I think if you look at some of the projects in the leaderboard, you can tell that some of them have kind of lost their narrative. They've kind of lost where they exactly fit in the crypto market. And in that sense, then a project like Kaito is useful because you can reward exactly what you want people to talk about, right? So I know Arbitrum has run like a few, like let's say week 1, I want people to talk about DeFi, week 2, this. So you can kind of pay for very specific topics that you want to like generate around your token. So definitely I agree with that. And the other way I thought of it, like let's say for a project like Hyperliquid, right? I mean, there's bull posters like crazy on Twitter. You don't need a product like Kaito, right? So is there a case where they would want to have a leaderboard? And I asked myself that, and I think there's still a good use case there where now it's not incentivizing mindshare, but rather as a project like Hyperliquid, I would still want to know, okay, who are my top bull posters, right? Who are the people who are posting organic content? They're constantly posting this. They are my top supporters. Because if I want to, like, let's say for my next airdrop, as if I'm the Hyperliquid founder, I would want to maybe allocate a certain percentage to these users. And right now, there's no effective way for them to track this. But if you have a leaderboard, it's not just incentivizing mindshare, but it also lets you know who your true loyal community members are. So I think that's another useful use case for projects that, they have the product market fit, they have the narrative, but they just want to gain access to their loyal supporters. Or maybe it could even be like asking them for product feedback, right? These guys are talking so much about you. They could have some good comments and feedback on how to improve. So just gaining access to that audience itself could be pretty useful.
No, that makes a lot of sense. I guess another like interesting like angle is like there's a lot of people that in recent weeks and months have been saying that crypto Twitter is losing relevance as it regards to like driving crypto markets, like in terms of prices. So how do you think like this affects Kaito, if at all, like long term?
Yeah, that's a good question. And I actually asked the founder the question. I like, I was very frank and I'm like, hey, there is some FUD on Twitter that, Kaito just incentivizes people to post like AI slop or just rehash other people's content. Or there's a lot of times people just post things because they're incentivized to do so and they don't actually believe in the product. And that actually affects the sentiment and that it's basically not good quality being put on Twitter, right? So the founder does agree that they're constantly reviewing the algorithm to design like how can we better reward authentic content and like real users. And that system is constantly being refined. You have to take note that Kaito is still like 7 to 9 months in production for the leaderboard at least, so it's still early stages. They're still refining the thing. And recently they also introduced this on-chain element where basically if once you're yapping, you can also track certain on-chain things. So maybe, for example, in the future, you could have something like, let's say, if I'm yapping about X token, do I actually hold X token on my wallet, right? Am I actually putting my money where my mouth is? And this could potentially be tracked on Kaito. So, just because someone posts out like something on Twitter, you can kind of like feed out who's authentic, who actually believes in the project from who doesn't. But yeah, definitely agree that that's one issue, but the founder recognizes it and he's actively trying to address that.
Yeah, I think another thing is like this narrative of crypto Twitter not mattering anymore applies mostly to majors. So like obviously like crypto Twitter does not have like a lot of effect for like BTC price movements or ETH or SOL, but like for these early stage projects which require like bootstrapping like adoption, like crypto Twitter is still valuable to get like this 5 to 100 initial users that are going to drive like just bootstrap adoption from like zero basically. So I think like there's still value in crypto Twitter for like early stage projects or like smaller scale um yeah DeFi
Yeah,
projects and stuff like that.
I agree with that. I think we definitely still see the KOL like distribution channels on CT, especially when it comes to smaller apps. Like this weekend was, the football, what was it, football.fun or something along those lines, that name. Basically there was a, small group of maybe individuals excited about that, or maybe they had a few KOLs kind of on board, but that I think sort of spread like a wildfire. So you can see what the impact is, at least for, these smaller niche applications or, new consumer apps, et cetera, when if you can get a few individuals with big followings to jump on a new app, it can be meaningful. Good questions though, Carlos. I was actually thinking about some of the same things. The one point that I'll make in Kaito's favor that I think is interesting is that, let's say we were in a world where Kaito the app didn't exist, you would still have these teams, whether it's Arbitrum, Polkadot, pick your favorite crypto, like they're, they may not go to Kaito, but the result is that they probably are still going to be doing some of these initiatives, right? They would go out, if they wanted to do some marketing push on CT, they'd go out and find, 20, 30 KOLs and pay them directly maybe, or go through like an agency that works with KOLs instead. It does seem interesting here that Kaito's been able to kind of maybe displace that maybe direct connection to individual Kaito, KOLs and like promoters on the platform, and make it into more of like this broader, somewhat, I guess you could call it decentralized, in that anyone can like sign up, although they are like a sort of centralized provider of the data. But either way, it's interesting that they've been able to insert themselves into this market where it didn't really exist before. It was just sort of agreements with individual content creators and so on.
Yeah,
right.
no, I think just a quick one. Yeah, I
Yeah,
think the point you mentioned, Danny, it's super relevant because I mean, like, I think last year there was a study like posted for how effective Polkadot's marketing spend was, and I think a lot of people were unhappy that so much money is being spent for these KOLs, but where's the impact, right? You're not really seeing this, and I think that's one of the pain point that Kaito wants to address, where a lot of these broad incentive campaigns or KOL spends, you don't have like clear like metrics that you can track, right? So that's when like a Kaito can come in, you have very actionable data that you can track impact wise, and that's the benefit. You get a higher ROI, and the cost is often lower, right? Per year it's 150K USD, and I'm pretty sure that's much lower than what Polkadot used to pay its marketers. So
yeah, I actually do remember when they paid for the animated icon on CoinGecko or CoinMarketCap, and that was big news all over CT for the however many millions were spent on that. So fair point to Kaito on that one. Awesome. If there's no other questions, we'll let me do a quick shout out to sponsors of today's stream. Quick shout out for Katana. This episode is sponsored by Katana, and their 1 billion cat campaign is live. Katana is a DeFi-first chain built for deep liquidity and real yield by redirecting chain revenue back to active DeFi users. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. And to our other sponsor today, EigenLayer. Is your treasury losing value to inflation? Learn how to make digital assets like ETH and SOL productive and with uncorrelated protocol-driven staking rewards. For CFOs, DATs, and corporate treasurers, the path to integrating liquid staking and restaking should be risk managed and aligned with long-term strategic goals. The Productive Treasury report from Liquid Collective and EigenCloud outlines practical adoption and a forward-looking vision for the role of the modern treasury as a strategic enabler of new technology. Read the Productive Treasury report today by following the link in today's show notes. And back to the show. Following Kunal and his coverage of Kaito, we do have Carlos, I think, is going to give us maybe a general update, broad market update on all things lending markets. So, Carlos, I'm going to give it away to you. What is going on in the world of lending?
Yeah, sure. So lending and credit, like credit sits at the core of like DeFi's capital stack. And I think it's the most relevant sector in DeFi. Like it has surpassed $120 billion in deposits and is approaching like $50 billion or $60 billion in active loans. It has just like drove like this DeFi renaissance at large. Like you can see here, like it has been in a secular uptrend since basically October of 2023. And the big leader in this like vertical has been Aave. So if we look in the next slide, we basically see that Aave as a whole has more than like almost 2 times the amount of deposits that the next 7 money markets combined have like on aggregate. So that's pretty significant. Like if you see like early 2023, Aave was still the leader, but like not by much. And over time, they have compounded like their lead over the rest of the pack, basically. If you look at outstanding loans as well, which I believe is more important than deposits for money markets, like they are approaching $27 billion in outstanding loans, which is also like more than 2 times higher than the next 7 money markets combined. And we can talk about the reasons for this, but like it just speaks to Aave's dominance as a whole. If you look here at the deposit market share, like beyond the Aave, there are some highlights on protocols that have gained significant market share in the past few months. Like I want to highlight, for instance, Morpho, which has climbed into second place across all money markets. And Spark, you see kind of like in 2023, they gained a lot of market share. This was due to their connection to the D3M, so the DAI direct deposit module. They were able to quickly bootstrap liquidity, but you can see that after like farming Spark tokens and like the initial surge, they kind of lost the market share. And the reason for that is that Sparkland by itself is really not that interesting. Like it's just a fork of Aave B3, and so there's not much reason for like to use Sparkland over Aave. So that's one of the reasons I think Sparkland did not take off, whereas Morpho offered this kind of like modular architecture and pioneered it. And so it was a lot more interesting, and they were able to onboard millions of dollars in liquidity via curated lending bolts. The other money market that has gained a lot of market share is Camino, and that's largely due to them dominating the Solana lending vertical. You see that no other money market like in this chart is active on Solana DeFi. So Camino has largely benefited from like owning its vertical within Solana DeFi. So if we look at the next slide, like this kind of like exemplifies my point about Morpho being able to onboard millions of dollars via curated lending bolts and like isolated markets. Their partnership with Coinbase earlier this year, which I believe Danny you covered in a flash note, like has been the most successful distribution tool for them. They have led like $1.7 billion in CBTC inflows year to date, which is higher than any other asset for the platform. And that has also driven USDC liquidity higher on the platform. And you can see here that when the CBTC deposits kind of took off, you also saw USDC liquidity rise on the money market, and that's been beneficial for them to climb onto second place across all money markets. And one interesting thing that I will note about Morpho is that they are beating they are beating Aave on base. So they are the leading money market on base, which I would argue is the third most interesting ecosystem after Ethereum L1 and Solana. One other thing about Morpho, which I think is interesting, is that Felix, which is one of the leading money markets on Hyper EVM, is using Morpho in the backend. So Morpho is kind of benefiting from like capturing, yes, Coinbase upside in the base ecosystem, but it's also like you also capture upside in the emergent Hyper EVM ecosystem, which, if you ask me which are the three most exciting ecosystem outside of Ethereum L1, I would say Solana, Base, and Hyper EVM, just in my opinion. So in Morpho is like gaining upside in two of those. So that's very interesting. If you go to the next slide, I want to highlight Euler because it's been the highest growing, the fastest growing money market year to date. It was starting from a very low base, but like Euler V2 has been highly successful in attracting certain kinds of assets, specifically like yield-bearing stablecoins and USD denominated assets. So the most successful market for Euler has been the usual stability loan market, which has driven $730 million in deposits and almost $350 million in active loans. And you can see here that utilization is super high, almost 100%. And the reason for that is that they are leveraging like Euler's hook architecture. And so people can loop usual's USD 0++ against the non-yield bearing stablecoin at a 5% fixed APY, which is very attractive, basically looping product. And that's what's been driving Euler's growth. Eulers also has other like interesting growth dynamics. For instance, they're the leading money market on Unichain. They are beating Morpho on that ecosystem, which Unichain today is not super exciting or super big market, but they're definitely like big on that ecosystem. And they also have like interesting like deployments and catalysts. For instance, there's a new governance proposal that will implement a fee switch basically for a lot of the markets that Euler is not monetizing currently, around a 5 to 10% net interest margin. So that would drive basically Euler's revenue up and would potentially have like a more attractive valuation. If you go to the next slide, I would also like to highlight like Maple specifically, like their Syrup USDC product. Like Maple has been the second fastest growing money market year to date. And the Syrup token has also performed quite well along with the Euler token. And I think that one of the reasons Syrup USDC is so attractive is one, their net APY to suppliers has outperformed every other benchmark year to date with almost 9% APY. And that's because they are able to benefit from their institutional client base. They lend basically OTC USDC to these institutions against high quality collateral like Bitcoin, Ethereum, or JITSOL. And then the other thing is that they have done a very good job on DeFi integrations, specifically on distributing Syrup USDC across other money markets and being able to loop that against non-yield bearing stablecoins to incentivize more deposits and kind of creating this growth flywheel. So you can see like Maple launch a Maple market on Camino for Syrup USDC looping. And it has amassed almost $90 million in deposits and $35 million in borrows. So that's also like a very interesting like example of like DeFi composability and like these money markets benefiting from each other's growth. If you go to the next slide, we also have like stablecoin deposits. What I would highlight here is that Aave has kind of widened the gap against other money markets in recent months. And the reason for that, like specifically in the past few months, is because Aave has been the primary beneficiary of Pendle's PTS USD utilization on money markets. We've seen we've all seen like Athena's growing stablecoin supply, like surpassing $10 billion. And Pendle is kind of like being a primary beneficiary of that on the PTS USDE market, and that is being looped on Aave against non-yield bearing stablecoins, and that's what has been driven the stablecoin liquidity the past few months. The other thing is because Aave has this liquidity mode, these large players can come in and borrow large amounts without a spike in the borrow rates. So that has also been favorable for Aave because you cannot really have like institutions or these whales coming to other money markets and borrow huge amounts without a spike in borrowing rates. And that's why Aave has kind of compounded their lead. I don't know if we have a lot more slides in this, but I feel this is a good point, like for discussion. If you guys have any comments so far.
Yeah, Carlos, I was gonna say actually on this point, maybe to tap into it, like Morpho, we know earlier in the year or maybe the late into last year, Morpho was, I think, outgrowing Aave by deposits perhaps, and I think maybe part of that was because for a while, there were not these Pendle instruments on Aave's markets, and so Morpho was getting a ton of seeing growth due to the PTs on USDE in its markets. But to your point, it does seem like whenever that change went live on Aave to enable those markets, that switch just completely flipped. But maybe another point there around some of these like smaller markets relative to Aave is that all the ones that you highlighted were, Morpho and on base, with CBBTC being a big grower, and Euler on like Unichain with what was it, the usual stable dollar being a large grower. It seems like that's maybe sort of like a playbook here, is that it's going to be really difficult to go toe to toe with Aave, but if you can find like a niche marketplace and maybe even like a niche asset to kind of build your foundation on, that seems to be like a growth lever, at least for these earlier stage protocols.
Yeah, I agree with that. Like if you look at Morpho and Euler, they were the first money markets to list PTs, like even before Aave did it. And like back then, PTs were kind of fringe instruments, and like they like Morpho specifically saw a lot of utilization for PTS USDE before Aave listed the instrument. So I agree with you there. Like the edge for these money markets with modular architecture is that they have permissionless market layer where they can list any asset like permissionlessly with an isolated market. And so they are very quick to capture like these new assets that are very interesting, and they can bootstrap liquidity in that way. That being said, when it comes to competing toe to toe with Aave, as you said, it's very hard because Aave has this liquidity mode. And so, for instance, for PT SUSD looping, despite like Morpho's theoretically better architecture to support that market because of an isolated market, Aave was able to offer lower borrowing rates than Morpho for that looping product specifically. And the reason for that is they also have what's called efficiency mode or E mode, where they are able to like, for highly correlated assets or like softly pegged assets, they are able to offer higher loan to value ratios and like better like borrow rates, if you will. So what we can see here, it's kind of what you were mentioning. If you see this is like active loans as a percentage of Aves, you see that Camino, Morpho, and like Euler V2 and Maple had kind of outperformed Aave in growth in 2024 and beginning of 2025. But in the past few months, Aave has kind of like outperformed all of them in outstanding loans. Like if you see like from July forward, like Aave has grown faster. And the reason for that is just the PT market that I was mentioning.
Carlos, I have a quick question. What do you think could be the thing that actually enables one of these protocols to disrupt Aave? Like, do you think that there's any like architectural decisions? Like, obviously, we talked about how Morpho is differentiated there, but would you say it like liquidity is just the dominant thing that, and really the only thing that matters for the most part? Or is
I
there
think it's a
anything
good question. I think like if we look at TradFi markets as a comparison, like think about the banking industry or think about the asset management industry, I don't think that lending is a winner takes all vertical. Like yes, I have a super dominant today, but I don't think it's going to be a winner takes all vertical. And I think there's room for a handful of money markets to grow into the hundreds of billions of dollars in deposits and outstanding loans, like in tandem with the growth in the stablecoin supply. Um, what I think will matter most going forward is probably BD and like just like distribution. Like if you look at Morpho, Euler, Camino, they have a very similar architecture. So kind of like what will differentiate many of them is yes, of course, like the tech matters, of course, risk management matters, but like what will also matter a lot is just being able to go to Coinbase and have these kinds of partnerships like the CBTC integration, where just like that you gain $2 billion in deposits like in a year because you have like this massive distribution partner. If you look at like Aave today, it's preferred by like ETH whales and like well capitalized players. But if you look at the borrowers, like as a histogram, like you see that the borrower base of Aave is actually very concentrated. And so like 350 addresses or something like that make up like 80% of Aave's borrows. So like the liquidity seems like a big moat, but when you look at it like by number of borrowers, it's actually not that big of a universe. So if you're able to like have this like distribution advantages or like get one or two partnerships that really get you a couple of $1 billion in liquidity, like I think that's a like that's the go-to playbook basically for this money markets going forward.
Yeah, so it kind of seems like if you are, feel strongly about growth of on-chain lending as a vertical, or you see, institutional adoption of these protocols kind of continuing as a trend in the future, then Aave seems like the sort of clear broad lean. But like you're saying, there can be these specific cases where you can lay out the Coinbase base X Morpho kind of partnership arrangement there, where growth of Coinbase and their pushing users on chain could be long term strongly beneficial to Morpho and other other examples like that.
Yeah, I guess there's other ways to like navigate this market. Like if you just want broad exposure to the lending ecosystem, like you can just like own Aave and like be done with it. I think that would do very well. But you can also like based on your fundamental thesis of the market, you can also choose your desired exposure. So for instance, if you are very bullish on Coinbase and the base ecosystem, uh, maybe Morpho is the most obvious choice because Morpho is actually beating Aave on base. If you also want exposure to the emergent hyper EVM ecosystem, then Morpho is also giving you like that optionality as well. So maybe Morpho is kind of better in that regard. Like if you think, for instance, that Sol will outperform ETH going forward, a better way to express that viewpoint would maybe be to own Camino, because Camino is the sole beneficiary of like Solana DeFi maturing and further like institutions adopting like Solana as an ecosystem. So like to express like this view on Sol ETH outperformance, then maybe Camino is the better choice. And like you can make like this case for a lot of other money markets. Like you can like look at Syrup for institutional credit exposure, for instance, and so on and so forth. So I think the big takeaways here, like Aave, yes, is dominating this vertical, but like I don't think it's a winner takes all vertical. Like I think like many money market, like there's room, like the pie is big enough basically for all of these money markets or like a handful of them to win, like in specific niches. And so I think you can just choose like your preferred money market based on your fundamental theses of crypto at large.
I have one more quick question. How do you think interoperability plays into this, and do you have any thoughts on Aave v4?
Interoperability, I to be honest, I haven't considered it, like how it affects like money markets. Regarding Aave before, I do think this is a near-term catalyst. I think Kunal can speak to this a little bit better than me, but I think this is a near-term catalyst that will enable Aave to tap into RWAs with Horizon and institutional lending or institutional borrowers with Aave before specifically. And yeah, that can just solidify its mode basically. Like with Aave before, Aave will also turn into a modular architecture similar to Morpho, Euler, Camino. So they potentially have the same advantages that these newer money markets have today.
Yeah, I can quickly add that like Daniel was actually writing on it literally just this moment, and I think you guys should see the report out by this week. But yeah, so for V4, like the main upgrades coming are like they're gonna have like a hub and spoke model where the hub is basically like a central liquidity on each chain, and spokes are basically where users access these different lending products, and each spoke can have like a tailored risk requirement like already factored inside. So let's say if I have a risky asset, the loan to value ratio is going to be much lower, and that is kind of already coded into that spoke itself. So you kind of want to isolate and manage your risk better. So that can be done through this hub and spoke model. And with all the liquidity now in a central pool, that means there's a better management of like supply and demand of these assets, which means that you can offer like better rates to borrowers and better rates to lenders as well. So I think V4 will bring up a lot more efficiency and will make the whole borrowing process safer and also more efficient. And they're also going to have like this risk premium concept where basically if you're borrowing using a better collateral, you're going to pay a lower interest rate as opposed to someone who's using a riskier collateral. And that you just want to prevent the case where people with a more risky collateral are subsidizing the rates that are someone with safer collateral has to pay. So it kind of isolates that. But I did some analysis on that, and I think the impact for the risk premium will likely be marginal, because if I looked into the existing collateral in Aave itself, like I think close to 60 to 70% is already like tier one collateral, like ETH, USDC, BDC. So this risk premium concept is probably just going to be like a good to have, but it's not going to probably move the needle in terms of revenue. But yeah, more analysis will come this week in the report, guys. So yeah, look out for that.
Okay, awesome. We can close out lending and Aave there. Thank you, Carlos. I think that was great coverage. And before we jump into our last segment here with the man who has not yet spoken, I want to do one last shout out to our sponsors for today's stream. Thanks again to Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion cat campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. And to our other sponsor, EigenLayer. Corporate and protocol treasuries face a major challenge today. Cash and traditional instruments are losing ground to inflation. A new industry report from Liquid Collective and EigenCloud lays out the next evolution of the digital asset treasury, moving beyond just passively holding Bitcoin to actively making digital assets like ETH and SOL productive through liquid staking and restaking. For CFOs, DATs, and corporate treasurers, the path to integrating liquid staking and restaking should be risk managed and aligned with long-term strategic goals. The Productive Treasury Report outlines practical adoption and a forward-looking vision for the role of the modern treasury as a strategic enabler of new technology. Read the Productive Treasury Report today by following the link in today's show notes. Thanks again to our sponsors. And let's kick it over to Dan Shapiro. We talked a little bit about Morpho and their connection to the Base ecosystem. I know, Shapiro, you've covered Aerodrome in the past. It sounds like maybe there's a little more to the story there again today, as well as some thoughts on Fluid. So I'll leave it up to you to take it away from there.
Awesome. Yeah. How about we start off with Aerodrome, and I think the story here is I think in the short term maybe played out a little bit, but the main catalyst was the Coinbase DEX integration. I think that definitely stirred up a lot of hype because our view here has been that Aerodrome is the liquidity hub of Base, and obviously Coinbase allowing people to trade on any Base DEX through their application directly is that's kind of the whole that's been the Aerodrome and really Base thesis from the beginning, is that it's going to have this kind of built-in distribution mechanism via Coinbase. And originally we thought, all right, maybe that's through the Coinbase wallet, right? The wallet is effectively, right, you go there, you deposit ETH, and it effectively directs you straight towards Base. When it turns out, right, all right, not only are they doing that, but they're literally going to let you trade on something like Aerodrome directly through the application. Like that's really like the truest, in terms of, right, the distribution advantage, that's like in the truest sense, that's what it means. And so, we think that this is like a pretty strong structural catalyst, and it's going to channel, Coinbase's millions of users directly towards Aerodrome. If you go to the next slide, I think this kind of better demonstrates what's happening. Like Aerodrome is actually doing like pretty substantial volumes, and that's even when you compare it to Coinbase spot volume. So it's been as high as 22 to upwards of 25%, and that's pretty significant. And actually at times with the ETH USD pair, and like this might only have been for like a day, but Aerodrome was actually the deeper market than Coinbase ETH USD. So that just kind of gives you an idea of how much volume Aerodrome is pushing. And I think Aerodrome's strength has always been those major pairs, and so maybe that's not too big of a surprise. But I think I think the story here is that if Aerodrome can be fast to list up and coming tokens, up and coming launches on Base, and kind of start to capture more of that longer tail market, then it could eventually even rival Coinbase's volume, right? And I know with like regulatory changes, Coinbase has been a lot better and a lot faster of adding kind of longer tail tokens to their spot exchange. But I still think it kind of rings true that the newest launches, if you want to see liquidity the fastest, projects are going to go straight to Aerodrome. So the fact that you could trade on Aerodrome through the app, I mean, I think that's awesome. And the numbers have kind of been supporting that. So actually, if you go to the next slide, we can kind of talk about how this has affected the valuation. I think when I wrote about this, the market cap was about half of what it is now, and so I think a lot of this, once again, I think a lot of it's been priced in, but we've kind of had like pretty bullish market conditions for the last month or so now. So I don't think it's necessarily run and click the buy button right now, but I think that this is setting up for structural tailwinds, and I think in the future, I think Aerodrome is definitely going to be the main protocol that benefits from this. So, I think actually we've already close to hit these FDV targets. So, once again, like I think we're going to see kind of how this unfolds, and if Aerodrome can continue to like capture more of the long tail. But I mean, I'd say like I still remain constructive on Aero, and I think for me it's probably my my project that I have the highest conviction on base. Just in the short term, I would be, I'd kind of I'd wait to kind of see what happens with Bitcoin and ETH, because obviously they've been on a pretty big run, driven by a lot of the DApp buying. So definitely bullish, but I'd say like being cautiously optimistic at these exact prices. In terms of risks, I think that Coinbase, like obviously they're expanding to other chains as well, and so Aerodrome, it's not like they're the only ones on that you can trade on Coinbase's platform. I think Solana with prop AMMs, specifically with the SOL USD pair. I think that if Solana kind of expands into some other popular, like you're seeing them Solana dexes gain a ton of market share. So Aerodrome is going to be competing on liquidity, depth, execution quality, and asset listings with them. So kind of as their mode of exclusivity resides a little bit, it's going to be important to see if they can still maintain the liquidity depth and retain market share against a lot of the established players. And obviously this is mainly Solana dexes. And then, I'd throw like Hyperliquid in there as well, but obviously they're never going to be tradable through Coinbase. The other thing is just like the regulatory clarity around here. I think that the CeFi to DeFi interface, right? Like I think given the current regulatory environment, that's not a problem, but kind of moving forward, gonna have to see how like what the market structure bill looks like before you can like maybe fully assess if this is potentially like, a regulatory risk or something that could be pulled. I wouldn't, expect that to happen, but it's just something to keep in the back of your mind that could be a potential risk. But yeah, curious if you guys have any questions on this one.
Yeah, maybe there's a question in it, but it may be more of an observation. But I feel like you highlighted all the examples I was going to point out. But this does seem like another case of sort of betting on the growth of on-chain versus off-chain. And like Hyperliquid lately, Hyperliquid and Solana have probably been the strongest examples of that lately. But I guess the benefit that you have when looking at something like Aero is, SOL is a near $100 billion asset. Hype is a $40 billion asset. So you kind of have a much more specific and like focused angle of attack if you had a thesis here around like the growth of more trading volume coming to Aerodrome via this like Coinbase avenue, versus betting on, maybe the growth of Hyperliquid generally as like the growth of like on-chain trading platforms versus centralized exchanges, for example. It's like a sort of like a different way to maybe like take that thought process is kind of how I'm seeing it.
Yeah, for sure. It's interesting to see how, because you could say that like currently the liquidity pools, like for instance the Coinbase ETH USD spot order book, like that is completely separate from Aerodrome's ETH USD pair. I do think it's in a way, right? Like this is technically Coinbase almost like hurting themselves a little bit, right? If you can go trade ETH USD pair directly through Aerodrome. So I do think that Coinbase themselves, like I think they're actually making a bet here that on-chain is going to become bigger, right? Because if they didn't think that, then like this would essentially just be themselves, almost shooting themselves in the foot a little bit. So I think that, more so than this just being bullish for Aero, I do think that, right, this kind of base integration through the Coinbase front end is almost a signal that, you know, whatever the Coinbase team is looking at, like I think they're clearly making a bet on chain here. And, you know, hopefully that on the back end, right, they're going to recoup any lost fees through, you know, their spot exchange, through base fees in the future. So I do think it's very interesting. I think, you know, the synergy between the Aerodrome team and Coinbase Ventures, that has always been, that's always kind of been like a bullish argument for me. And I think this is, you know, this is that playing out directly. And so, yeah, I think, you know, once again, Aerodrome's probably likely the liquidity hub for, you know, you could say the on-chain portion of Coinbase. And so you know, as you can see, with whether it's, you know, Hyperliquid being like the primary candidate, like whoever's like whatever app or protocol is the main trading hub, like they can generate a lot of revenue. And so, you know, once again, short term, not entirely certain on what happens. I think a lot of this initially has been priced in, but I think that like this integration, it can't be overlooked, right? It's more than just Aerodrome getting some more volume. I think this is Coinbase making a bet on chain. I think that this is a tight partnership between Coinbase Ventures and the Aerodrome team. And, you know, I think that there's some pretty cool things that they could do in the future, you know, like merging the order books. I mean, that's a big lift, right? But yeah, you could theoretically route volume onto, you know, you could actively route volume and orders from the Coinbase Spot Exchange into the Aerodrome ETH-USD pair, if that would provide better execution for the traders, right? Like there's some cool stuff that you theoretically could do. So definitely one to keep an eye on, in my opinion.
Yeah, Daniel, I think one question on my end. I think you covered the narrative point of view very well, and I definitely get that angle, and that's probably contributing a lot to the bump that we're seeing. But wanted to get your thoughts on tokenomics as well, right? So with the VE model in place, yes, they earn X amount of revenue, but they are actually like emitting quite a lot of tokens, and on a net basis, they're like earning negative earnings, if I'm not wrong. So do you think, you know, that should kind of be taken into account when doing like an analysis for Aerodrome? And also, do you see like kind of like a reflexity with market conditions where basically, you know, when ETH is going up, it's going to lift all boats, and as the price of Aero increases, it means that, you know, rewards to LPs become more lucrative, you get more people depositing, that makes it, you know, easier to facilitate volume, price goes up. But the same, you know, reverse could happen as well, right? Like once, if ETH were to correct, prices were to fall, you'll kind of get that same loop downwards as well. So do you think that a lot of the recent run up is just due to this reflexity in the price of ETH? And yeah, I wanted to get your thoughts on tokenomics as well.
No, 100%. That's actually something that back in my first time, or my first report on Aerodrome in 2024, I wrote about that reflexive dynamic that you just explained, and like that's exactly what's happening. And so, to me, right, you can't think about just like the static backward-looking revenues, because obviously, as you stated, like at some points those do go negative. I think similar to, right, like the lending market, like as Carlos just talked about, like I think the DEX market is liquidity driven as well, almost, you know, even potentially more so than lending, right? Like you do have some differentiation between, you know, pool architectures, but if something is a concentrated liquidity pool, like a Uni V3 style clam pool, more or less that is at feature parity with every other product on the market. Obviously, prop AMMs, they're effectively using clams as well. They're just have protocol owned liquidity that could be like intelligently market making, you know, better than like your, you know, average LP. But to me, it's about, can Aerodrome utilize those emissions to, right, on the upswings? Can they on a net basis, can they increase the total liquidity that is deployed to Aerodrome, like amongst these cycles, right? Because we saw end of last year, right? Aerodrome ran up a ton, and then I think it went down as much as like 80+% down to 30 cents, right? And now it's it's back over $1. That speaks to the like reflexive nature of the V Aero model. But you also see Aerodrome as a platform. If you look at daily volumes, those are increasing over time. And so I think that eventually, right, they're not going to be able to use incentives forever. But as we just talked about, right, if they are like the clear primary on-chain trading venue where Coinbase is literally routing volume to them directly, they're going to have that, they're going to have that volume, those fees, right, that stream of revenue where they can now, compete against the Uniswaps straight up or, surpass them in the absence of incentives. So, once again, like you're absolutely right. Like there's no free lunch anywhere. It's just, it's hard to compete against the early DeFi protocols that launched so early, like Aave's and, so far of a lead. Like I do think it's very impressive how Aerodrome's been able to take meaningful market share using their strategy. But you're right in that they're going to have to change it eventually to make it kind of more sustainable.
Awesome. Let's talk about Fluid, Shapiro.
Cool. So yeah, Fluid's the other protocol I want to talk about. I think the biggest thing I want to talk about is, I'd say, Catalyst coming up and then their buyback proposal. So beginning with the Catalysts, kind of the upcoming things that they have are the launch of Fluid on Solana, the launch on Jupiter Lend and Dex V2. The first thing, and yeah, what you're seeing right now is total assets deposited. I mean, Fluid's been growing like crazy recently. Whether you're looking at volume, on the lending side, total assets deposited, they've been growing pretty consistently, which is very bullish, you could say. I think looking at the catalyst, though, I think that the market is yet to kind of fully appreciate what could be coming. So if you go to the next slide, let's start with Dex market share. So if you look at if you think about the Solana launch, what's about to happen is Fluid's going to be exposed to about twice a addressable market that's double where they're exposed now. So already they have around 20% market share on Ethereum, which is pretty substantial given that Uniswap has been dominant on there for so long, and they've grown to 20% in a little over a year. So that's very impressive. If you go to the next slide, when they launch on Solana, Ethereum and Solana actually have about equal spot DEX volume, around 20% market share. And that's with BNB kind of growing like crazy in the last couple months. But launching on Solana, right, like immediately, it effectively doubles their addressable market. So they've been very successful on Ethereum. You could argue if they maintain that success moving to Solana, they could theoretically double their volume. You go to the next slide. Where Fluid has dominated so far is with stablecoin swaps. The reason why they've dominated with stablecoin swaps is because stablecoins are correlated pairs. And so, this is kind of similar, like Carlos talked about Aave's E-mode, right? If you're levering up on an asset and withdrawing a correlated asset, your risk of liquidation decreases significantly. And so Fluid's entire value proposition is that LPs can effectively reuse their liquidity position, whether that's on the lending or DEX side, and deposit it into the other product. So if you have a large lending position, you can take that, you can deposit that into the DEX and start earning extra fees on your debt. If you have if you're LPing some pool on the DEX side, you can actually take that LP position and use it as collateral, withdraw against it, right? Take that money, put it back into the DEX, right? You can effectively loop this. And Fluid, with their LTVs, you can create 39 units of liquidity for every 1 unit that you deposit, right? So you can generate, you effectively can create these leveraged LP positions. And so, right, with stablecoin swaps, the pairs are correlated. Your liquidation risk is super low. You can just make a lot of money. You can make more money depositing into Fluid than, right, Curve or Uniswap, right? And that's why it's seeing so much growth. The problem, though, is that until recently, or until DEX v2 launch, Fluid has not been using Uni v3 style concentrated liquidity pools. They're not using like v2, like, passive static range pools, but the protocol does have the ability through governance to like modify the ranges of some specific pools, but it's not, right. It's really not that effective. That's why in the market downturn, there was like a lot of ETH USD LPs that suffered some pretty bad impermanent loss. But what DEX v2 will do, which is the other catalyst, is that they're introducing concentrated liquidity pools. And so really what that'll do is it'll allow LPs to manage their positions better and protect themselves from impermanent loss, which means that, in theory, Fluid could start working a lot better, it could start becoming a lot more desirable for LPs for pairs, volatile pairs, not just correlated pairs. So if you go to the next slide, what this is showing is, and this should have been a smooth chart, so I apologize for that. But what this is saying is that volatile pair swaps are effectively a market that is 7 times larger than stablecoin swaps. And so if, really the argument here is, okay, Fluid is expanding to Solana, which doubles its addressable market. And Fluid is also upgrading to DEX v2, which will make it more efficient and really, viable for volatile pairs. So it's doubling its market. That the volatile pairs represents a 7x increased market size. I'm not saying Fluid's volume is going to 14x, because there's market structure differences between Ethereum and Solana. Mainly on Solana, the dominance of prop AMMs, as it pertains to like the key asset pairs. And this is something that Carlos has written about, and that he kind of helped me work this part of the thesis on. So maybe after, if he has some questions, we can talk about that more. But even, right, like conservatively, I think it's safe to say that even if you just look at Fluid on Ethereum, if it can dominate just the ETH USD market and steal some of that market share away from Uniswap, right? Like it could increase its volume and, and revenues or fees, 25, 50%. And that's being pretty conservative. That's not even including potential volume increase from Solana or exposure to Solana markets. So I think that these catalysts are pretty big in that sense. Do I expect Fluid to dominate volatile pairs like it does for correlated pairs? I do not. I think that it's a lot easier levering, right, getting those benefits that Fluid offers you with smart collateral and smart debt with correlated pairs, because you don't have the liquidation risk. I think that the second that you start to really lever up with volatile pairs, I think that the level of sophistication that requires and active management of your positions increases significantly. And I don't know if, right, that is necessarily, an extra couple basis points here or there. I don't know if that is worth kind of all that hassle. But I do think for potentially some of the larger pairs where there is liquidity there, at safe loan to value ratios, if you could do something just as simple, right, as instead of depositing your ETH into Aave, if you could deposit it into Fluid, and then you also just get this extra yield because that's deposited into the DEX and it's LPing, the ETH USD pair on Fluid, and you're earning more on Fluid than you could on Aave with fairly low, to almost no risk. Like, I think that could be very desirable. Now, are they going to take 50% of all volatile swap market share like they did for stables? Like, no, I would bet against that. But right, once again, the volatile market is so much larger than correlated pairs. Like, even if they just get a fraction of that, they could increase their growth, or they could grow significantly, right, upwards of like 50 to 100%. The other exciting thing is the buyback proposal announcement. So if you go to the next slide, the team proposed a few different buyback models for the token. The first model is a sorry, one sec. The first model is a dynamic buyback model. So if the market cap ever goes below 500 million, they'll start buying back the token with 100% of all revenue. And then as it gets higher than 500 million, it'll start buying back the token with a linearly decreasing amount of revenue. The second model is a TWAP buyback, where they will buy back. Or it's not a TWAP buyback. It's a 30-day TWAP buyback model, where if the price is below the 30-day time-weighted average price, so essentially just like the 30-day moving average, they will buy back the token with 100% of revenue. If it's over that moving average or TWAP, they will not buy back tokens. And so this is to kind of adjust the buyback based on market conditions. 30-day moving average is actually pretty quick, but we do see kind of like a difference in distribution of price being below or above that, depending on the markets. Like since late October 2023, since Bitcoin bottomed, has been going up. Price actually spends around 60% of the time above the 30-day moving average. So maybe in bull markets, right, it's only below it 40% of the time. In bear markets, maybe it could be below it as much as 60% of the time. So really that, more or less over the long time frame, it's essentially buying it back 50% of the time revenue goes to buybacks. And when you actually run these numbers, both methods produce not identical, but very, very close results in terms of the amount of buybacks. And so what you're seeing now is a sensitivity table where just kind of look through, based on recent volumes, like it really looks like the buybacks are going to be somewhere between 10 mil and 30 mil annualized. And you can see at various FDVs what percentage of the tokens the protocol would be buying back annualized. Hyperliquid buys back around 4%. So I think it's looking like Fluid would be somewhere between 2 and 3%. So I do think that that's actually pretty significant. And another reason to be bullish Fluid, at least another reason why I'm constructive on it. So nothing's live yet. The community's kind of debating and voting on what they want, but they would go live August 1st potentially. So yeah, I think there's a lot of things to be excited for Fluid, right? Solana launch, DEX v2, and then buybacks. It seems like everything's kind of coming together for them, and definitely reason to be bullish. So that's kind of the overview.
Yeah, I mean, this was a great overview. I think like a couple of things, right? Like as you were mentioning, like it's going to be interesting to see if Fluid can take market share away from prop AMMs, just because like the DEX structure on Solana is completely different to that of Ethereum's. The other thing is that they do have like a strong distribution partner with Jupiter for the lending side, for the beta product. and I think that this can be really good product, especially for JLP looping, because obviously like that's Jupiter's like a flagship kind of token. So like if they can bootstrap a meaningful amount of liquidity for the JLP looping product, that would be beneficial for Fluid. And then the other thing like that's more interesting is that this buyback proposal that you were just discussing, I really like that the founder is moving away from this programmatic buybacks as a default and kind of opening debate on what's the optimal way to conduct buybacks for a protocol. Like we've seen on the past for things like Radium, for instance, where they just bought rate tokens back at when the market is euphoric and it's not really necessary, and you're just buying back your tokens like very expensively. So like this dynamic buyback based on FDB, it's really beneficial because you can buy back your tokens when you think that your product or your token is undervalued fundamentally, which is kind of like how buybacks work in the traditional world, where if you see a company conduct stock buybacks, is because they think that their stock is potentially undervalued relative to what investors as a whole think, right? So I think that the dynamic buyback proposal is really cool, and I would hope that's the one that's chosen at the end over the TWAP, like 30-day TWAP. I don't think that's really interesting, like just a programmatic TWAP. But let's see what happens.
Yeah, I totally agree, and even in the proposal, right? I think the team was favoring some hybrid approach between the two, or a fourth option, right, which is no buybacks at all. And maybe they're just growing so rapidly that they don't even need to do that, right? And their token is fully diluted. There's no investor overhangs or cliff or anything. So I think that's all very bullish. And something to mention as well is I think that to the prop AMM point, and this is something that I've talked with the team with a little bit. I think prop AMMs they're awesome, right? Because the team themselves are effectively the market maker, right? And because they have a ton of liquidity, they can create substantial depth on the major pairs that they're trading and not get run over, right? Obviously, I think toxic flow is probably the most devastating thing for LPs, and these teams, they're well capitalized, they have strong talent. If they can update their prices right faster than other arbitrageurs or competing LPs, right? I think that's how they're able to quote so effectively, right? They have this infrastructure advantage, potentially a talent advantage, resultant algorithmic advantages, and it just makes sense, right? Like I think what we've learned is if you're just retail person, if you're retail guy Joe and you want to deposit your $1,000 into an AMM to make passive returns, like you're gonna suffer impermanent loss, right? It's just you're effectively market making. And so I think something cool that Fluid could do as well is create like vault products, and this is something that they talked about as well in the buyback proposal, where these vaults might have specific strategies of using smart collateral and smart debt, where it makes it a lot more desirable if you're just a retail user to want to deposit capital into there for yield, because that it's going to follow like a good strategy. So I think that to me is their only chance to compete with the prop AMMs on Solana. But I think that what I do like is the team they've been around for a long time. They used to be Instadap. I think that they've evolved. They're very adaptive. They're obviously like OG DeFi guys, very, very DeFi native. And so I think that they understand all these problems. And, we talk about differentiation. There isn't really another protocol that has this type of, DEX lending hybrid. And because of that, they can, they can offer some pretty advantageous, or they can provide capital efficiency that other protocols just can't provide. So yeah, we'll see what happens, but I do think that there's a pathway there on Solana. It might take time, but I think there's reasons to be optimistic.
Awesome. If no other comments, then yeah, maybe I'll just summarize it. It definitely seems like potential upside from expansion to Solana, obviously the buyback potential, V2, I think you mentioned. So I think all exciting. The big question mark that I was going to raise as well that Carlos so gracefully did was the hyper competition that we see on the Solana DEX side of things. But if they can edge their way in there, then definitely some interesting potential upside to. I don't know that there are many cases where we see strong success in the EVM side as well as the Solana side. So if they could be the first to like really carve out in both ecosystems, that would be really interesting, because that's not really been achievable up to this point. We tend to see Solana native teams do well in Solana, and then EVM native teams do well on the EVM side. So would love to see that. But I think we are through our topics for today, gentlemen. Thanks for coming out and giving all of your great insights and sharing some of the research that typically is reserved for subscribers, but wanted to share at least a little bit of alpha today, talk about what we're digging into, get a little bit out of the typical noise that maybe everyone is following on CT and headlines, and dig into a little bit of the deeper research that goes on, maybe behind the scenes or just what we're actively tracking. Maybe just to end on a lighthearted note, anything outside of the topics covered today, is there anything we're excited about going into the next couple of weeks, next couple of months? I'm seeing there's lots of discussion rumors around Solana DATs. Maybe that's the next trend. Anything else top of mind that we're looking forward to here?
I think Solana DATCOs will also coincide with the ETF approval. So that's going to be interesting, like what gets more inflows, what gets more buying pressure for SOL. One of the advantages of being late movers compared to like ETH ETFs is that SOL ETFs will launch with staking. So it's going to be interesting if like staking has like a meaningful differentiator in terms of the demand it captures on the institutional side.
Yeah, I think for me, it's next week, the World Liberify token launch. Yeah, I just think it's interesting. I think in the pre-market, it's being valued around 2022B, which kind of gives you an insight on how the market's looking at the token. Like, I mean, it's not really fundamentally valued, right? Because they don't have a working product yet. And like Aave with 60B in TVL trades at 4B, but something in a similar category, no product yet, is trading at 22B. So it kind of gives you how the market's valuing it. And I think how they're doing it, it's like, hey, Trump with the meme coin is around like 10B in valuation. So if this is a Trump DeFi product, we got to put a premium to it. So I'm just excited for the launch. I want to see how it trades and whether we get another crazy people pile on money in it. That could be interesting.
Honestly, I don't have any. I was kind of hype. I was excited about the Heaven launch. Rode that a little bit. Not excited anymore. Move past that. Actually am starting to get a little bearish right now. Just in the short term. I just feel like momentum is dying, and so honestly, probably looking to de-risk. But I mean, you brought up the Solana DATs. To me, I think that's probably the most interesting thing here. And maybe if there is, I don't know, the weird things happen around these kind of turning points in the market, right? Like right when everyone thinks it's over with ETH, ETH hit an all-time high. People were doing live streams about ETH all-time high price and all this, right? Like I wouldn't be surprised if the Solana rotation has begun, and maybe that's why, ETH could be significantly underperforming Bitcoin, is people selling and preparing for what could potentially be, a next leg. So we'll see what Bitcoin does. I'm not convinced that it's going to bounce here. I think it could go a little deeper, but I don't know. I could see a Solana rotation occurring, especially if we see those DAT flows. So I think that's probably the number one thing to be looking at right now.
Yeah, I'm gonna agree. I mean, the DATs have been the sort of the biggest, strongest trend of the past few months, and maybe even of the past year, if you count Sailor, with the largest DAT in that. They've definitely been a big force within the market. So, and seeing what's happened with ETH recently, with a lot of the ETH DATCos, to see a big push for Solana or even other assets outside of BTC and ETH, it would be interesting to see a continuation of that trend. The reverse of that, to see all DATs sort of leave the market, or their bids leave the market, would be probably not as exciting for all of us risk on. So to see that continue, I think that would be a positive outcome. Certainly, if it's Solana's turn, and we see big inflows like that are rumored for big DAT raises to then get shoved into the SOL token, that should be pretty exciting for Solana. I guess the big question mark here, which I don't know that anyone has the answer to, is that I think at least on the ETH side, and a lot of the ETH DATCos, it was not so predicted, right? I think people had kind of, like you said, Shapiro, ETH was kind of written off earlier in this year. And when those treasury cos came onto the market, it was starting to see a little bit of a revival. And I don't know that there was this pure expectation of wow, they're really just going to shove billions into the token and send it up. But we inevitably saw that happen. In this case, I don't know, maybe we see the market sort of front run that a little bit with Solana. And there could be a bit more of a sell the news situation rather than a run it up type of outcome. But it's hard to say. They could surprise us to the upside if the rumors that we're hearing around potential DAO raises end up being even much larger. Then we could go higher. If they fail to really bring that money forward and put it in, then maybe it surprises to the downside. We'll just have to see. So all right, I think we can close it out for today. Thank you guys for coming on again. This was a pretty long one. And I'll just do another quick reminder, shout out for DAS. Use code 0x100. You get £100 off. That's 100 something USD. I don't know what the number is, maybe $130 or so off your tickets. So find the link in the description in the show notes. And some of us at least that get to make it out there, will hopefully see you in London this October. But until then, and until next time, we will see you guys. So thanks for coming on today, guys.
That's it.